Everyone, it is June 17th. It's just a few minutes after 12 o'clock, 12:11 it says on the handy phone. And we are here for another edition of Chart the Markets. And I certainly want to thank our friends at FEG Token and smartdefi.com if you want to learn about the commercialization of tokenization. Visit smartdefi.com. You can tokenize anything, literally anything. I also want to thank our friends at BYDFi Exchange. And as usual, today we will be giving away 2 more trading bonuses, $50 each. And I will select them from user IDs from my account. And that link is available in the Twitter feed, on Blunhouse TA or at Blunhouse TA on YouTube. All of those links are there. And of course, let's thank our friends at TradingView because we're using their charts today for the most part anyways. And TradingView really is the go-to platform if you want to learn how to read price on a chart. There's certainly lots of options out there, but I think the most common is going to be TradingView. And if you don't have a TradingView account, you can just go to tradingview.com and get one. There's a link on my YouTube description as well. But just grab yourself an account, even if it's a free one, to start getting yourself familiar. Now, the fun begins. We are certainly living in interesting times. And these interesting times cause this action-reaction phenomenon that we know as volatility. And we talk about it quite frequently, but I think that's because we're living in this time that we're in, and it's something that we need to deal with. What we're looking at here is the daily chart of Bitcoin, which we have been looking at in the past. And if you guys recall from our last session, we had, maybe it was even a session before that, we dropped this horizontal line there, just representing some topping of price. And at the time, it's like, hey, this looks like we might be getting a little top heavy. What's going to come next, right? And we just have to let the chart really tell us what's going on. And one of the charts that we like to use is the 4-hour Bitcoin chart, right? So if we just talk about what's on the chart quickly, we have a volume profile to the right. You're going to see a kind of a green area in the center and then 2 shaded gray areas. The gray areas represent lighter than average trading. The green area is what they call a value range. This thin green line is the upper value range. The thin green line down here is the lower. The red is the point of control, which is just basically averaging out what you see on your chart there and giving you this level. Within the volume profile, you also have these little gaps, like you see here, and shelves. This would be a shelf. This would be a shelf. This would be a shelf. Some shelves are deeper than others, giving you more support, and others are a little narrower and a little more shallow. All right, so we don't really know what the next candle is going to bring us, aside from using what we do know to help us. Now, if you remember last week, we talked about this level yet again, obviously being a resistance level on this 4-hour chart. And the 4-hour kind of gives us an easier to read window into that daily chart. I've always felt that anyways. And we always talk about how price breaks one level and finds the next. You know, when you can't surpass a level or when you can't break through what is resistance, chances are, after a while, you're going to start to break down, right? And that's kind of what's been going on here, is that we've broken down. While we have an opportunity, let's just do this. Anytime I can connect these 2 quick points, I like to do it. Does it mean it's relevant and I'm going to hang my hat on it till the end of time? No, but it just gives me something else to guide me through analysis. All right. On this chart, like I said, we have the volume profile. We also have a 5 EMA, which is what you would see here, this white line, which turns red from time to time. And when it turns red, it's sensing a little bit of a fade in price momentum. And sometimes that helps us because it gives us an early clue. Below here, we have the T line. That's the yellow line. Anytime you see the yellow line on my chart, know it's the T line. And the T line, for those that don't know, is the 80 EMA. All right? This is a script that we've written that actually allows you to trade kind of a system, because what it does is it allows you to trade within major moving averages. I like to use moving averages as levels for price. And because everything is fractal, which means that what you see on one time frame, you'll see on a next, and so on and so on and so on, right? But they're also targets for price. And price also behaves particular ways when it meets these averages. And if you look back to the left of your chart, and this would have been kind of that first toppy area on the 4 hour that we talked about a couple Tuesdays ago. Right? We start to sense the fade. Our short-term indicator starts to sense the fade, and that's part of our script. Then it gives us a confirmation, and it brings us back to the 20 MA on the 4 hour. And the 50, really. And we break them. And when you break clustered averages, either up or down, it's usually significant, right? And in this case, I guess you could say it was. But what happens when you test these levels for the first time? They fail. Now, it's not every time they fail, but there is a higher probability that first attempts typically fail. And these are things that you can kind of itemize as part of a methodology and a process, right? So the first attempts typically fail, right? Break one level, find the next. Trade in and out of the volume gaps. Price will be drawn to the point of control and the value ranges. Right? All of that stuff you just layer on to help create a system. So here you have a break of the 20 and the 50. The first test fails. Now, at what point do you enter the trade? You have a couple options, right? If we would have taken our signal, it would have been way, way, way back here. Right? And this is where it becomes really important to do what we're told, especially over the longer time frames where the moves that you'll see have a stronger likelihood of being trend moves or significant swings, which is kind of what you're at on the 4 hour Bitcoin. But we had an early indication to either close our long or go short. And the chart did everything else for us. This is how, and I get these questions all the time, and a lot of you reach out to me after these streams. It's really, really important to follow the divergence between the two levels, the two EMAs. That is really the most important part of how I trade the system. This divergence tells me that it's okay to stay short, and even when we have this impulse candle, which back in here, right, we had big green candle and then the big red candle. That green candle didn't have enough juice, didn't have enough momentum to not only pull the 5 EMA up through the T line to kind of start the trend change, but look where it failed. Right at that level. Now, that's not all bad, because actually what it's giving you is an opportunity to re-enter your short and feel good about it, because the divergence never broke, right? So yeah, did it get tight? Yes. But did you get a signal? No, you didn't. And then you have these two candles with equal tops at resistance, And that is a an opportunity to go short, or if you got washed out, to re-enter your short. And to feel like that the probability of the trade working out is strong, because you're working off things that you can benchmark and see with your own eyes. Start to sense the fade. Here's the confirmation. If you didn't take it early at these dojis, that's fine. Breaking support, failing the tests, right? That first test that usually fails, quite often you'll see a move that's significant after it. And it's kind of what we got here. And as long as this divergence between these two levels stays intact, and you can see how the 5 EMA stays red, that's another cue, you're okay. And then guess what? You start all over again. But price is always going to range. It's always working from levels to level, which is kind of why we wanted to use this 4-hour chart. Let me take these off for a second. And if you can do anything, if you can trap price within a range, you're going to find that it's incredibly easy to trade. And when you, this is annoying, when you add the addition of the volume gaps, it gets even easier. And all of this stuff just repeats. And this is really important, because when we're volatile like this, when, you know, these big swings up and down, if as long as you're managing the risk properly and you're doing what you're told on the chart, you should probably be okay. And part of that managing risk is not using too much leverage, if you're using it at all. That will be your nemesis, and that will screw up everything for you. No matter what you're trying to do, or what system you're using to trade, or, you know, whether you're trading over short or long time frames, if you're using too much leverage, it will bite you in the butt. You have to be able to live to trade another day, right? You know, you can't respawn your money, so you have to use stops. And in times like this, make sure they're tight so that disaster doesn't come back and bite you. And it doesn't matter what you're trading, we should be doing that. Now, if you're finding, let's say you're scalping and you're getting stopped out a lot, that's probably fine, because it tells me that you're managing some risk there and you're prepared to get stopped out so that you don't lose a ton, and you'd rather lose a little, and I'm okay with that. But if you're getting stopped out too frequently and none of those trades turn into anything that runs for you in a meaningful way, then you probably have an issue with how tight that stop is in the first place, time frame, and lot size. Like, you shouldn't be getting stopped out constantly on a trade over a longer time frame, right? Like, should be some room there for you to breathe. So if you're getting stopped out too frequently, then you're either, there's something else going on. If you're scalping and you're getting stopped out all the time, like, you know, let's say an example, you were looking at a 1 minute chart, right? And you were running really tight stops. Like, even on this is Bitcoin 1 minute chart. Here's a signal for you, a short signal. And here's another example, just to show you that all this stuff happens on various time frames. There's your signal, there's your big move down. Here's some impulse candles up that do not break trend. And guess what? 2 equal tops, and back down you go. You'll see this time and time again. So it would allow you to, even on a short time frame, like if by chance you got stopped out here, this allows you with some confidence to re-enter the short. You know your trend down is still intact. 2 equal tops like we talked about, and that's where you could lay your stop in. anywhere up here. And chances are on these moves, under this setup, you're still working under a current sell signal. This could be any time frame. But when you see this setup, the probability of this trade working out is actually pretty good. It's quite strong. And if you do get stopped out, then you get stopped out. And you're going to learn that if you're too tight, that's okay, right? It's going to happen on the short time frames. You'll pick a spot to re-enter because you know as long as this divergence is there, you're okay with the trend, and it's just a matter of catching another good entry area. And I usually find those around the T line and or the 5 EMA. So as an example, when you see this big move down here, like this, you kind of have to wait. So price is going sideways, so I have impulse down, price went sideways, couldn't break the T line and closed below the 5 EMA each and every time. You wait for it to get back to these levels, a few candles sideways, and you can re-enter your short. Any questions on any of that? Good. Let's look at quickly. Here it is. Solana. Because I know someone in the crowd likes to trade this. So, doesn't matter the time frame, doesn't matter the asset, whether it's crypto, stocks, all of this will apply, and the methodology for how you interpret what price is doing on the chart doesn't change. Solana's daily chart, you had obviously a big move down. Catch a nice trend up. Little sideways action that never really breaks down. Another move higher. Where do you find resistance? That red line is what? The point of control. These levels will always be acting as a draw for price. So as price kind of capitulated down here on the right, the point of control was going to be a draw. And this would have been, minus any other, moving average target or any past price levels that I would pick up, that would be a draw for price. In other words, it would be a target that I would be taking profit at. And price doesn't break down, and it actually gets a bid right in the same neighborhood, right back up to the point of control. The retrace brings you back to that level again, and it's just rinse, repeat, rinse, repeat. If this breaks down, let's blow this up a little bit. If this breaks down, and you can see how important staying out of the volume gaps are, because that's what happened here. If you're going to fail the point of control, that's kind of the worst area to fail, because it's a concentrated measure of past price. It breaks down and it falls basically all the way into the gap, breaks the value range, the lower value range, and we see this all the time. Your move down, here's your attempt to go higher, fails, and price will be looking to do what? Take out the previous wave's low. This is actually quite a critical level if it breaks all this, excuse me. On top of, did this divergence change? Nope. Not at all. And it's just a vote of confidence for you to stay short, or at least not go long yet. And this is really, really important, because all the time, I'm just using this chart as an example. It doesn't have to be this, it could be anything else. Or someone will reach out and say, well, I'm having real troubles charting and trading. And you peel the onion back a little bit, and what you find out is that they were trying to long all these red candles. Why? Again, time frame is irrelevant. This could be a 5-minute chart, a weekly chart, doesn't matter. Why would you be trying to long any of these candles? Partly because someone whispered somewhere, sometime, that you should buy the dip. Buy the dip. Oh, price pulled back, buy the dip. You never see prices this low again. Buy the dip, man, gotta buy the dip. Okay, stop the nonsense. How about buy the dip instead of a dip? Like, if your ultimate goal is to go long, why? I don't get it. Right? It doesn't make sense. Why would anyone be buying this in here if they want to go long? Other than being told to buy the dip, what's the other thing you're told? Dollar cost average. And there's some legitimacy to that stuff, dollar cost averaging. I get it. But as a trader, are you telling me that you're taking your bank and you're trying to long all these red candles because you want price to go higher? You realize how irrational that sounds. Just buy the dip, right? Then go long. But this constant, buy the dip, buy the dip, buy the dip. You want to buy this dip? How about this? How many people bought the dip? Is this an extreme example? Yes. People bought the dip on this thing for years. And they spent all their money to average themselves down to 30 or 40 cents. And not only do they have dead money today, they've had dead money for years. Rethink what buying the dip for you actually is and what it means. Do not confuse buying the dip as an investor and buying the dip as a trader, because they are two different things. This is a 5-minute chart, and the chart's telling us everything that it wanted to do. It's better and better. So, what do we have here on this 5-minute chart? Again, time frame is irrelevant. As price was pulling back, what was it drawn to? The point of control on the volume profile. Think of it as like a gravity or an anchor. All of that past price on the time frame that you're looking at is an anchor. And price on the way down and confirmation sell signal, nothing changes. These are just green candles in downtrends. Trust your chart, and it brings you all the way back to the point of control. And when you attempt again and fail, right, and you know the moves that typically come off the point of control, not unlike these kind of twisted MAs, are usually significant. And that's what we got, right? You don't know what's coming after each candle, but eventually this stuff starts, your averages start to twist, and you get a sell signal. And boom, price just collapsed. But what else could we have looked at that was giving us a clue? This is the stochastic RSI. I'm not sure if I'm making that worse or not, but what I'm trying to point out to you is this top, lower top, lower top. Fisher transform, lower top, and the MACD is obvious. It just was sitting flat and then rolled over. So there's always other things on your chart that are going to be helpful. So you were starting to see the foot come off the gas before price collapsed. And do you base the entirety of your trade on something like this? No. But what will happen over time, and the reason I'm pointing them out to you is because I want you to look for them. Right? So this is basically pretty tight consolidation. Right? If this was anything but a 5-minute, it would essentially be flat. But there were some cues in all this consolidation, all of this sideways stuff that you're wondering if it's ever going to mean anything. Think of this as the foot just coming off the gas, right? These are the buyers exiting the building. The momentum is leaving. And then price followed. And it fell right off the volume profile and consolidated for a while right back at the lower value range. And hasn't been able to break the downtrend on this 5-minute chart. And is all we're doing is just following along, right? We're trusting in our charts because we believe that this is a language. Everything that we're looking at is based on some form of mathematics. And if you believe that math is a language, which I do, then this is what we're looking at, a derivative of mathematics. This is 1 hour oil chart. And it's a real good example of, let me just find another time frame, what volatility does. And I don't think I have to explain to anyone why the oil market is volatile unless you've been under some sort of a rock or been cut off from technology. But there's a lot going on in the world. And for us, as traders, again, this could be a Bitcoin chart, it could be a stock, it just happens to be oil. You have to allow the chart to guide you based on how price behaves when it's approaching these volume gaps, approaching areas of support or gravity, as we might say, for the point of control. We have to trust our charts, volatility or no volatility. And I'm showing this 4 hour oil because, it's a nice representation of what, a nice base of consolidation can do. And the fact that it's sitting at the point of control, as a trader, it's important to know that, right? If I'm looking to go long or short, an ideal setup for me, if I could find it, in a perfect world, would be something in and around the point of control where price is consolidated. And then from there, we're just looking for other measures to tell us when momentum's changing. So I'm always looking for these really, overbought or oversold areas, particularly from the stochastic RSI. Right? And hey, on the 4 hour, you get a nice clean buy signal in and around the point of control, and off price goes. And that's basically the daily representation. Now, what's interesting about this chart now, unfortunately, the daily doesn't like the volume profile, so I'm going to take it off for a second. There we go. We've seen this oil chart for months. It's something that I've been using for ages, and this trend line was put here around this time when I can kind of connect these two dots. 2 points. And look how, even with all of the volatility of late, which has basically been the result of war, what did price do? It really respected this level. If we look at it on the weekly, it's even cleaner. I'm showing you this because when everything feels, for whatever reason, that it's falling apart, you need something to rely on that tells you the truth. Regardless of how crazy the story or how volatile price is behaving, what is telling you the truth? What can you rely on that will give you a high probability of being accurate? Because we have to remind ourselves that the market does not care about what we think or what we believe or what we need to happen or want to happen. Price is driven by what money's doing, not what people are saying, which is ultimately the only thing we care about, what money is doing. And price will behave the same way time and time and time again. I'm just going to leave it like that for a moment. This is the weekly chart of oil. And we've talked about this before. This amber line on all of our charts is the 1,000-day moving average. Oh my God, nobody uses a 1,000-day moving average. Are you crazy? No, I'm not crazy. Not at all. The 1,000-day moving average, when you think about how much time that is, what do you think that tells you? It tells us that we have so much price history that we should be able to put money on what it means when we break this resistance. When you break on the downside 1,000 days of price support, that's a big deal. And when you break it to the upside, it's equally a big deal. But what's more important is how it provides support and resistance to price as we move along here. And the person that I learned from told me a long time ago, you want to be the only person in the room not making a mistake one day? Come with me, I'm going to show you something. This is what he showed me. Now, look where this 1,000 days of price history is aligned, right with this trend level. And yeah, for me, it's actually meaningful. If you continue to get resistance along this level at 1,000 days in this trend line, then I would feel confident suggesting that price will want to come back. Look what this wick went. This isn't pin the tail on the donkey, but sometimes you think it is. Right? Look where this wick went, right to the 5 EMA. These are the ranges and the zones that we talk about. It'll probably want to come back and test that again. I don't think it's going to want to leave that big wick hanging there. Might not be this week, might be next, don't know. But, the fact that it's down right on the 5 EMA, we're going to see it again. That said, what would make me change my point of view on oil? You'd have to trade above 1,000-day MA on the weekly chart for a meaningful period of time in order to take it seriously. And that move shouldn't be driven by global chaos in order to get it there. Right? It should be based on demand, supply, demand, blah, 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 blah. Economic outlook and so on and so forth. So that's what it would take. But this blue line that we've had here, or I've had here for a very long time, was always the target. 61.66. It looks on the weekly that it was a real target. And it was a real target because current price was looking for past. And these skis along this level here is the reason that it's lit. And through all of this nonsense, this is a year and a half, maybe more, right? It was doing its thing. Lower highs, right? With the exception of this one, but another lower high here. All these little things were leading it right to where we thought it was going to go. Because you just have to follow the chart. There's got to be one thing that you can trust when there's chaos. And the reason I'm bringing this up is because do you know that each and every time price would bottom, people would be, okay, this is the one. We're going to 100. No, we're not. This is the one going to, oh, never mind, maybe later. This is definitely going to be the one, right? This one has to be it. And so, oh no, darn. Price is going to do its thing. You can't front run what money does on the chart. Or we're too small. We're just, the fly on the dog's back. No one even knows we're there half the time. But what we can do is that we can follow the money. That's all we have to do. It's like being the chauffeur of the guy who's a billionaire and just listening to what he does day in, day out, so that you can enrich your own life. Is all you're doing is what he was doing. That's it. And when we trade short time frames, all of this seems like chaos. Right? But when we look at these things over long periods of time, this is a weekly chart of gold. Like, honestly, there's not a lot of reasons not to be continuing to long gold. And what I want to point out is that at each and every one of these tops, people would feel like, oh, now we're into all-time high territory and so on and so forth, and price just keeps going up. As irrational as it feels and seems, price just keeps going up. That's it. And because we use multi-time frame analysis on everything that we do, if you would have entered, so we've just gone to a monthly chart on gold. This consolidation on the monthly, and if you go back to the weekly that we were looking at, all of this stuff where you get these little bit of sell signals or price goes flat, if you were, and here's the consolidation we're talking about, if you're in early enough, you are always looking ahead because you're well ahead of the trade and you're trying to figure out, well, how long do I stay in this trade? And the answer is as long as it wants to go higher. And when you look at the monthly chart, price never stopped wanting to go higher. This might seem like a lot, but it wasn't. Because the chart was telling you, no matter what anyone else was, that price wanted to go higher. That's it. And the more divergence between these levels, the more exuberant those candles are going to be. So when you get ahead of a trade, right, and it's moving in the direction that you want it to move, now again, let's say you're in this gold trade and all of this choppiness kind of freaked you out. What would you be doing? You'd be looking ahead to the longer time frames to make sure that on those time frames you were still just marching along. That's it. That's all you have to do. So we often make this too complicated. I made this too complicated for myself, right? For years and years and years. I hate to show this chart because I think it's terribly unfair. But layer, right? Everything that you're seeing here feels completely irrational. Like as price was moving higher, and this is why I want to show you this, as price was moving higher and then started to roll over. So this is a daily chart, by the way. It's not a weekly or anything like this. A daily chart. Someone's saying, buy the dip, buy the dip, buy the dip, buy the dip. Hey, we're consolidating, buy the dip. This is all the stuff you'll hear. And I hope that from this point forward, what you're going to see, or what you will do when you hear that, is put the asset on a chart so that you can read it like this. Because as someone's telling you to buy the dip, you have to question their sanity, because you know that the chart's telling you, or what the money is doing is telling you, that there's no reason for you to be buying anything, even now. Even now, this is still in a downtrend, and it looks like it might want to pick up speed. And there are people, I guarantee you, there are traders that have blown their accounts trying to long this thing. Right? We know that. Or a chart similar to this one. This is the definition of falling knives, right? You can't catch a falling knife. Why would you want to? I'd rather be the person that drops the falling knife for someone who doesn't know any better to catch it. And you don't want to be that person that doesn't know any better to catch it, and hopefully that's why you're here. This is the simplest form that anyone could follow not to make a mistake. No need to buy anything in here. There is just not. Right?
Hey, Blunt. Not to sorry to
Yeah.
if I hopped in the middle, but I'm not sure if you did already. Hopped in late. You went. Did you go over FEG already? The FEG chart?
No, not yet.
Oh, please, when you get the chance, like
Let's go
with the whole buy the dip stuff, please, like I want to see it. Let's get to the trenches.
okay. This is the Maxi feed. So this is the daily. Okay. Yeah. Show the weekly. So it doesn't matter. We know what happened here on why this occurred, but ultimately, like if I'm looking at this daily, the first thing I notice is that, okay, finally you have price consolidating at the point of control, right? And it's obviously range bound, right? What am I looking for? No. So, just real quick, anyways. So, you're range bound. I would be watching to see if price breaks outside of this range, up or down. You can't help but notice this big gap to the upside with the other value range being up here. So that's what I'd be looking for. Because what happens is if you break out, so let's say we break out to the upside, we're going to want it and test this previous wave's high, and you want it to break here so that you can test this one. And if you get up into that area, well, then you're in the gap, right? Then you're in this gap. and that makes it a lot easier for price to move higher. The downside risk is you break that same range to the downside, and you fall into this little gap, and then you're susceptible to the lower value range. But of course, that's where you want to end up. And these moves like seem irrational. Like if we go back to layer just for a minute, like nobody expected this massive downtrend like this, but it happened. And eventually it'll reverse too, just like oil will, and so on and so forth. And the chart will tell us when that's going to happen. And sometimes our exuberance gets in the way. Because we've grown up in a time of instant gratification, right? We want something to happen now, man. I'm ready today. Price has to go up today. But we don't control that. But when you understand how price behaves on the chart, it makes that a lot more livable, let's just say. Again, doesn't matter the chart. This is BYDFi again. I love this. There's your two equal tops. Senses the fade and turns red right away. You know, there was lots of early opportunity to short even up here, but wow. It seems irrational. This move higher was irrational. But it happened, right? We don't have any opportunity to ask it why it happened, but it did happen. Now, fibs, fractals, and filters. Those are the three principles that I built my methodology around. The fibs are what you see in front of you right now on this daily BYDFi chart. And again, it could be gold, it could be the stock, it doesn't matter. What do the fibs tell us? Well, they gave us a real nice level here. That was obviously strong resistance. 618 is right down in this level here. And because I watch this, I've known that 618, this is one of the few things that I chart regularly because for some reason I like to trade it. But I've known 618's down here for a while. And I've been shorting on and off for several days. But what I'm not doing is I'm not trying to long these candles. I'm short these candles. I'm not gonna, I was long these ones, but I'm short these ones. And I'm indifferent to what it does. I don't care. You can go zero, I don't give it. Doesn't matter to me. Hopefully when it goes to zero, I'm short. That's all I care about. I don't get a Christmas card from these people. I don't know who they are. My job is to monetize the chart. That's all your job is, monetize the chart, if you're a trader. So, what's the target that I've been keeping an eye on? Obviously 618. And we're getting there a little sooner than I thought. But it is what it is. I'm just glad to be on the right side of the trade. Why am I on the right side of the trade? Because my chart told me everything I needed to know. The fibs gave me a level of resistance. The 618 is kind of that, when price pulls back, it's that area of pain where people will be like, okay, the buyers will come back in, right? So it's a target, that's all. Doesn't mean I'm going to close it, doesn't mean I'm going to close it when I get there. We'll see how it looks when we get there.
Hey, Blunt, I just want to make sure that my chart, or I'm not bugging.
Yeah.
You don't have fibs drawn on your chart right now, correct?
Yes, you know what? Thank you. What do I do without you guys?
I just want to make
I got
sure
old
I was
man.
seeing the
It's,
right
it's
thing,
old
right?
man disease, my friend. That's what it is. Here you go.
Right.
How's that? Is that better?
It's all good. I get it now. Exactly. I got you.
So yeah, I won't repeat all that, but I've been watching this chart. You guys know I chart this thing. The 618's been on my radar since I've been able to draw fibs on it. So I have a range. It's just, it gives me another option, another ability to be able to track and trap price. And it has that psychological play that in and around 618 things happen. And we'll see what it looks like when we get down there. And hopefully we do. So the fractals, well, that's where we start getting into different time frames. Right, so this is a great example because we're on the daily. Let me just pull the volume profile out. You know, breaking the point of control was key. But, you know, we look on a 12-hour chart. I have a feeling. I have a target down. I have a target down somewhere down here, I think. So that's what I was kind of looking for. But nevertheless, I'm still short because why? Divergence is still there, guys. Again, this could be any chart you're looking at, anything that you trade anytime. Doesn't matter. Do these moves down seem crazy? Yeah, they are. They do seem crazy, right? I don't know that I'm going to catch one. I just know that the chart's looking rather toppy. There's another example of that impulse candle up that creates an equal top on the next candle, and then the bottom drops out. And then again. The chart's just telling us what to do. And we're just using our various different time frames so that we can make sure we don't get hit by something we didn't see coming. Bitcoin's obviously starting to lose momentum as well. What do we know? What do you think it's going to look for? And is all that's on this chart 2 EMAs and a volume profile. And of course, the indicator working in the background. Price is going to do what, guys? It's going to look to take out the previous wave's low. Possibly this, but I'm more inclined to think this is what it's going to want. And does that look likely to you when you look at this chart? It does to me. Because why? Because the bottom of those candles fall onto this shelf right here. So in other words, price is getting into this volume gap, although it's not a large one. There's not as much volume here anyways. I would not be surprised to see it do that. And if it does that, how many times have we shown price coming back to the point of control? Because it acts as a draw. And when that draw is pulling from below, sucking price into those gaps, if no new money comes in to save it, that's how you get here. Right? That's how you get here. But the volume profile allows a trader, and this is just my own opinion, but I think it allows you the opportunity on any time frame to make better than average returns just by utilizing the volume gaps and the shelves. So, you know, I know this is a heavy daily candle, but again, if we're just looking at our chart, we know what current price is looking for past. If this fails, it's going to learn to take out the previous wave's low. That's on a slight shelf just above this gap with another draw for price, the point of control in the center. And that is just the volume profile. Where's some of our other draws for price? Let's just throw up the 20 and the 50 and the 200. What else do we know now? So we've split the 20 and we've split the 50 in one candle. To the downside, if I was starting to feel bearish before, I probably feel more bearish now. Because when the market does that, that's typically a pretty strong bearish signal. And it's eating up all of this stuff in here. And if we fail the 50, what are we looking for next? If we fail it, we're looking for the 200. And where does the 200 sit? Just beneath that point of control that we just spoke about, that we know is a draw for price that sits on a shelf with the volume gap above it. There's nothing overly complicated other than just kind of learning through repetition what these rules are, what these setups are, and just layering them on the most simple of a template, a volume profile, and 2 EMAs. Do they seem like they're magical sometimes? Yeah, I get it, and that's okay. But it's just the layering of these simple things over and over again. Right? So we've broken one level, we found the next, we've broken it. That puts this next one in play. It doesn't mean, though, that we're not going to test the 50 again. Doesn't mean that's not going to happen. And when it does, we have a set of rules that we can apply when it gets there. First attempts have a stronger probability of failing. We know that. And at the very minimum, we could get a little bit of prolonged resistance. If it breaks out, we know the next target is going to be the 20. Break one level, find the next. Same, rinse, repeat, rinse, repeat. We start looking at some of our momentum indicators, and look right here at these candles that got, I want to point out this kind of knuckling between your 5 EMA and your T line. That impulse candle, and then boom, that sometimes shows us that pullback's coming, but stochastic RSI rolls over, then the Fisher does, and then the MACD. Just layering confirmations on top of one another. The point is not to get analysis paralysis, that's not it. I'm just trying to show you that there are tools that you can use to make you feel more comfortable with what's going on the chart. Right? What can make you uncomfortable are shorter time frames with lots of leverage. Right? Those are typically the things that will get you every time. And and I'm sure most of you have experienced this kind of stuff, right? So you know that someone, like, I'm being genuine when I say that, the shorter time frames and the higher leverage will cause you problems, and it will make your learning a little more difficult. Trade spot or super low lev until you feel real comfortable. Is this kind of not what we were talking about in essence on Bitcoin's chart, right? Are you going to end up with a candle that closes well below the 50 like this? Right? And what did you have as support for several days? The 50. First attempt? Yes. Broke it back here. Another example of twisting MAs, right? Gotta love that. Love green candles off the 50. That's just super exciting for me. It's like Christmas time. Price travels right up and finds the 200 MA, and it starts to use it as resistance right away. And it doesn't take long to figure out you're kind of going sideways. And you can't break out into that gap that you can see there. That's a big juicy gap. Like, price can race through those things quite quickly. And finding that kind of triple topping, that 3 times of resistance there at the 200 is a little bit of a tell after a while. So anyways, it broke down hard, and now it's broken the 50, and we'll have to figure out what's beneath it to look for another level or find a time frame where we can find something. But it doesn't matter what the asset is. It just doesn't. as irrational as it feels, right? This is oil again. Whoops, and it's having like a 3% plus day. There's a reason why I leave a lot of this stuff on our charts, because it's great to be able to come back and look at it, just like the Bitcoin chart that we had with this level on it. Because you'll find at another point in time, it'll be meaningful. And for those of you, I know there's some of you in here that are in my Telegram group as well. And a while back, we would do live sessions in Telegram on Saturday mornings when Bitcoin was doing one of these types of runs. And what we had done is we had laid out levels, like through areas like this, just as an example. And we left them there. And then over time, as price started to pull back after that run was complete, it was fascinating to see how important those levels that we drew out months before were. Price on its retrace, we found, was ranging between those very same levels. But on your daily chart, at that point in time, you just kind of forget about it, right? You forget about all those ranges otherwise, unless they're there. And it was really fascinating to see how price would trade through those ranges during its retracement, right? So the downward and upward movements, let's just say that this was one of those ranges. Like, it was just a perfect find its range, and then once it would chatter for a while, then break and do exactly the same thing. And they were there months ago. And that's just more proof that current price really does look for past. And it's lazy. That's why these volume gaps work. It just takes the path of least resistance. And these big gaps are there because these big candles, these big exuberant candles that are awesome when you're long, when you're trading them, are filled with fairy dust and air that can't support anything when they're retested on the way down. That's why these gaps work, because there's no price there to hold anything up or prevent it from blowing through. Do we have any quick questions? Now I'm just going to look at the stock market for a second, because there are those of us that do trade it. And another example of doing what you're told. Right? Does anyone think that we deserve to be at all-time, near all-time highs? I don't. But here we are, right? Because the market doesn't care about what I think. It doesn't care about my rationale. It just doesn't. The only thing that matters is price on a chart. And this is the S&P 500. Volume profile, volume gaps, there's your POC. Are we trading above these? Did we get a sell signal in here? Nope, not even here, right? And this candle, what did it do? It sat on the 200 and bounced. Even that candle wasn't enough to pull the 5 EMA through the T line, even though it gapped down. So the chart doesn't care what I think, but I care what the chart says. So no matter what's going on in my own head about what I believe the market should be doing for whatever reason, I have to do one thing, and that's block out that bias, because that ultimately is noise, right? My bias, what I think and believe and all that nonsense, is really the stuff I got to block out when it comes time to look at the chart, because I have to believe the chart. The chart tells me what money's doing. The chart told me that we had a green candle off the 20-day moving average with a confirmation signal under it. That's what the chart told me on a daily. Now, I don't remember what day that was, and I don't remember what my mind space was that day, if I was bullish, bearish, or whatever. It doesn't really matter. The chart said it was go long time. No matter what I'm thinking, this is irrational. Why is it doing this? This is irrational. Why is it doing this? Oh, they're playing us. Who's they? I don't know. Right? Blah, blah, blah. The fact of the matter is, price was just walking up the yellow brick road. And it doesn't matter why, it just is. And it's all we can do is try and anticipate what it might do next. So does everything go up forever? Absolutely not. Nothing goes straight up and nothing goes straight down. So ultimately, when the S&P 500 on this daily chart does start to pull back, what has to happen and where will price go? Well, I'm just blowing this up a bit more. So here's price sitting on the T line, which is essentially the shelf. Underneath the shelf, you have a volume gap. And the shelf for that volume gap is the point of control at 59.09, or what is that? 59.10, let's just say. That's the point of control on the daily S&P 500, 59.10. The 20-day moving average is around 59.51. So if price breaks the T line, right? This, by the way, this is still a confirmed uptrend, right? Because the divergence is still there, and you're working under that current buy signal still. So price has to break this level and start testing this lower range in order to get down to the 20. Now, one of the things we talk about, or I talk about all the time, is regardless of the time frame I'm trading on, I am paying attention when we're trading above the 20, the 50, and the 200, which we are in this case. We're trading well above all of them. And ultimately, price will want to come back and test the 20 at a minimum, right? It's not going to continue to go straight up, and it will need to take a pause. And when it does, it will probably want to come back and test the 20. So at the very least, time and price will find a way to come together to test the 20. The question becomes, when it does test, does it hold? Like, is this going to get one of those first touch bounces or support? Or does it break down, fall into the gap, because it would have some momentum coming down here, I would anticipate, and does it find the POC? We don't know, right? We just have to go one candle at a time. The only thing that you can do to try and look inside these candles is to shorten your time frame, because everything is fractal. And possibly because we don't want to get hit by something we didn't see coming. Oh, what do we see? This is why we do this. What do we see on the 4 hour? You actually have a sell signal on your 4 hour chart, and your candle is, in all likelihood, going to close below the 20 MA. So you break one level, and ultimately we'll find the next. Where's the 50 on the 4 hour? 59.44, 59.45, and it sits within what? The volume gap. And if you don't believe how this stuff works, just do it. Just use it. I use it every single day. Trade in and out of these gaps. They are probably, without being able to see them on your chart, it makes it a lot more difficult to get an idea where price might want to fall into or jump into. This 4 hour candle is very susceptible to falling into this gap. This makes me feel better that it could find the 50-day. And it's all just a series of overlays to give you better probability. That's it.
Don't summon me, Blunt, when you start talking about filling gaps. You'll summon Rico anytime when you say
Someone say gap. Yeah.
that.
It's like,
How's it going, brother?
good. You know, we're just gonna get a light with a big G in it, like in Batman, right? And just shine the big G up into the sky, and everyone will know to look for the gap, right?
Yeah.
But
I love
yeah,
what you're talking about because it gives you a different perspective. You won't be bummed out about the chart going down. You'll start feeling very like, okay, like right there, I see that gap heading towards the 50. I probably wouldn't take the trade on that gap, but I'd be curious to watch it go to that 50. But if it broke that 50 moving average, I'll let it fill that gap and take a short to the 200, if not to that point of control. And you can do this on any chart. You can do it on almost anything. You'll
yeah,
find where that volume profile lets you fill these gaps. And you don't have to always wait for it to go up. You can do it while it's going down.
no, absolutely. And like again, the volume profile is one of the more simple tools that anyone will come across. So if you're new and you've never used the volume profile before, I think it's a great way to start learning because you know, you'll once you see these things, you can't unsee them, right? It's kind of like that. And I think for people that have never ever used the volume profile before, when they overlay that onto their existing methodology or system, I think it just enhances almost anything, whatever you use, because it's showing you where money has been and where it has not been. And as a trader, I want to know that. Right? This indicator that we're looking at right now is actually one complete indicator. So I built this so you would have enough to trade the system, right? So that's why um, there's 9 different moving averages here, and there's anything from EMAs to SMAs. There's all kinds of different MAs available. I typically only use the EMAs and SMAs, but I've given you 9 because I like to use one for the T line, one for the 5 EMA, and then a 20, 50, a 100 that I'll turn on and off when I need it, 200, 500, and 1,000. And it sounds like a lot, but because everything is fractal, let's just turn them all on. I didn't think about that. So because everything is fractal, it helps give me these ranges that I was talking about. So here's a fail of the 20 and the 50 on the 1 hour S&P 500. We were looking at the 4 hour just a minute ago, right here. Right. So this 4 hour sell signal is actually following a 1 hour sell signal, giving me kind of further confirmation that maybe we're going to lose a little bit of steam here. And on this 1 hour, like this indicator is giving us everything that we need to trade this. There's your gap because it comes with a volume profile as well. There's your gap. There's the next target. If you were to use all your MAs, there's the 100, and there's the 200, and there's your 1,000 and 500. And of course, it's giving you your alert signals, long and short, being filtered by some stochastic RSI magic that goes on in the background. that's it. This is interesting. So this is getting, I don't know, did something happen? Because all of a sudden price is falling. Every time I see price fall now, it's like, uh-oh, what happened? But yeah, this is going to give you everything that you need in one indicator to trade the system that I've shown. In one indicator. And one of the reasons I've done this is because not all of us can buy a premium membership or subscription. And sometimes you find yourself a little bit challenged to put the things on the chart that you want to put on the chart. It doesn't matter the type of trading system that you use. But this allowed me to kind of bulk the system together because it's not a quote unquote indicator per se. It's a system that involves indicators to trade it. And I've just made sure now that you've got enough, no matter what package you have, to be able to pull it off. And you can flip them on and off as you want. You don't have to use them all, obviously. Right? So, and if we we look at Bitcoin's daily, we're going to get a good idea of what these levels are going to be. Okay. Here's the 200 and the 100. The volume profile is dynamic, and when I say dynamic, you'll see even on shorter time frames, like if you're looking at a 1 minute or something, you'll notice that these little levels will change. But do we break down and go all the way into the 70s? No, I don't think so. Not in the near future anyways. But you just got to hope for support in here, because if you don't get support from the 200 and the POC, and this gap becomes a real slippery slope. And by that time and price will have moved, right? The 500 will be even a little closer, waiting to be tagged if money doesn't come in. So what changes price direction? Money does. What makes price go up? Money. What makes price go down? Lack of it. So buying pressure comes in, price goes up. Money comes out, price goes down. And in the case of crypto, if you don't even have to short something to help, for price to fall. Like just doing nothing, like taking the liquidity away from certain things makes it do that. So because of it's just not as flush with cash, especially some of the smaller things. Right? What else did you want to look at today? This is an ETF. It's called NAIL, and it is a leveraged, bullish home builders ETF. Because there are a lot of you. It's not just crypto that you trade, right? You'll have other investments and things like that. I'm showing you this because it is another example of failing certain levels and what happens to price when it does. So what are we doing up here? Well, we have two equal tops in price, which everyone wants to call a double top, and there's more on that later. But right now, they're just two equal points of price. And typically what happens psychologically is that for those that didn't sell up here, as price has pulled back, they've said to themselves, you know what? The next opportunity I get when price gets that close, I think I'm going to take it. I'm going to sell. That's typically what happens. The theory, anyways. But what happened up here, for whatever reason, the reason is really unimportant, price did pull back. We were trading above the 20, above the 50, and above the 200. So we're basically trading above all major moving averages. And anytime I'm trading above all major moving averages, or the 20, the 50, and the 200 in particular, I'm very aware that price may want to test at least the 20. And then from there, that's what happened, right? It tested the 20, except it didn't hold, right? It gapped down and broke the 50. What did it do when it tested the 50 for the first time? Failed. What did it do when it tested the 20 for the first time? Failed. Where did they fail to? The 200 MA. Until you gap down and you break the 200 MA, and now all of a sudden you're in bearish territory. Your sell signal came up here. I would have been shorting at the failure of the 50 because that's just me. And then where did price fall to? For most people aren't looking at this moving average because it's not even going to show up in their chart. They don't even think about using it, and that's okay. But what did it touch? It literally bounced off 1,000 days of price action. Right back again. Right, this is just a down, like, you look at the 50. Right? Rejection, rejection. Like when you see price doing this, it's not coming back anytime soon. And nice big green candle or a couple green candles. These are just green candles in downtrends. They are absolutely irrelevant. They did nothing to change trend. Maybe they were a trade. That is it. Nothing more, nothing less.
I love that
But
right there.
I can assure you, everybody thought the home builders were going to be just fine when they saw this green candle off the 200 day. Right? Rewind the tape,
For sure.
right? Rewind the tape and listen to it. Listen to not just the technicians, but the analysts, right? Oh, that's bullish. But we know that was nothing. It was just a green candle. Big deal. This is what's way more important to me. That divergence. And if you did get washed out or stopped out in this trade or whatever, for whatever reason, did you have an opportunity to re-enter harm-free? Abso-friggin-lutely. Because you got that divergence was still intact, telling you that the downtrend was still in place, and you were fine. The trend continues.
Blunt, when you're talking about packages, are you talking packages on TradingView?
Yes.
Okay, because there's 4 or 5 people I know listening, and I just wanted to clarify that for those people.
Okay.
Thank you.
No, thanks. I didn't know you were here, Butterson. Awesome. This guy, for those that, what's your Twitter handle? Is it at Butters or something?
at buttersiam.com or at buttersiam1 or something like that.
Yeah. For those that you who are on X or Twitter, whatever we call it today, give this guy a follow. This guy finds gems. Like I don't know. Like I'm a chartist. That's what I do, right? But you find friggin' treasures. That's what I'll say. Butters finds treasures. So anytime you get a chance to, if you see him in a space, jump in because he's probably giving away some gold.
There's a good chart I'd like you to look at. CLS.
CLS. Oh, Celestica. Wow. Okay. So this is an example of a case on steroids of where all your major moving averages twist together and then one day something happens. Well, this is what happens, right? You just broke out. And what's happening here, and thanks for showing me this chart because it's actually would be in a textbook if I was to write one. So when you have all your averages going flat like that through consolidation and then price starts to move higher, what's happening is it's going to fan all of your averages out, starting with the shorter term ones first. And what this does is it gives you a real good idea of where price might come back to test and what those levels are. So, this, of course, everyone's looking at this one saying, geez, that's looking a little toppy there, right? And the automatic inclination is to short, which I get because it is looking a little toppy. But could this just not be a situation where price has gotten a little exuberant, a little hot, and it might want to pull back a little bit? Again, time and price come together and the 5 EMA and price meet. And as all this just ends up being is a hot candle that comes back, tags this level, and then takes off again. And take out this high. That's the upside opportunity. And where it goes from there is anybody's guess because that's pure price exploration from that point forward. But just because it's extended here does not necessarily mean it's going to automatically roll over. I'd be looking to see if it comes back to test the 5 EMA and or the T line and what it does when it gets there. It could just kind of bounce and then take out these highs and move forward. If it fails the T line, then it's going to look for the 20 and so on and so on. But that's a heck of a chart. When did this take off anyways? 23. Because
Yeah.
this was
Hold,
something
please.
that, like people used to joke, like if you bought this, like back when it was born, you're still underwater. Like there was a time where this went nowhere. like just nowhere. Dead money, total dead money. And then boom.
Yeah, you've got a lot of them that are playing out that way. Another one that I play is IBM. Same thing. It was left for dead. Now it's at all-time highs.
You know, David Elliott, who taught me, used to love trading IBM. And you're right, it's like something that it was just kind of forgotten. But look at this is a weekly chart. Like all of these major moving averages. This is why I run them too, because I do like to know when this happens. But when they all come together like this, the breakouts are phenomenal, right? And again, boom, there you start to spread out. It's pretty easy, right? 20, 50, 100, 200, 500, and 1,000. And you can already see how you're getting 20-day continuation off the 20. It looks like you got a little love here from the 50 without a touch, but still, that's a great chart. I don't think this is done. This is not done at all. Look at your stochastic RSI is opened right up and shooting higher. Same with the MACD. This wants more.
Yeah, there's a few good ones around. Another one that I play is TSSI. You've heard that one before,
Mm-hmm.
Blunt.
Yeah. It's another, holy smokes. Yeah, that's another monster. Yeah. People lost houses trying to short this one, I think.
Yep.
So that's the monthly. What's the weekly look like? Yeah.
That one was one that came over from OTC in around the $1.65 range, and it's sitting at what, 21 and change now, I think, today, roughly.
Yeah, 21.58. So that's a many of multiples. One of the ways that you can find stuff that does this is to scan for it. Right now, I'm not saying that's what you're doing, Butters, but you can scan using the scanning feature here in TradingView, which is in your bottom left corner. And I do it all the time, right? Trying to find things that are ready to break out. And I just find that if I use a few simple parameters, because if you overwhelm the scanner, it just gives you a whole bunch of gobbledygook and nothing makes sense. But if just a few simple parameters to pull out things that are doing nothing, to help put them on the list, I do that all the time. Like I've caught BlackBerry doing off the scanner right before it's popped. And it's the kind of stock that you almost forgot about, and you're like, huh, that's weird. Let me take a look. And you look at the chart and you go, huh. right? So, like it made a good run about 8 months ago or a year ago or something like that. It was off the scanner, off the TradingView scanner. So just, if you guys aren't using it, familiarize yourselves with it. It's a really good tool. Whether it's...
That was the one Joe Pesci and I were on back then.
Yeah, exactly.
Yeah, because they're tied in with, everybody relates them to a telephone company, but they sold that off to an Irish company. And now they're tied in deeply with the mapping devices. I forget the 4-letter terminology. You know what I'm talking about, Blunt.
QRX? Is it QRX?
Yeah, something like that.
Yeah.
They're tied in with NVIDIA. Yeah. So they're tied in with NVIDIA now in their self-driving program.
Yeah, I've heard that too, about like it's more of a technology security company than anything else now. But yeah, like this chart's gone really nowhere for the longest time, and then boom, it took off. And again, off the point of control. So, and this is the daily. Like you don't have to be on a 5-minute chart or a 15-minute chart. When you catch moves that run off a daily like this is just a home run. And here it is on the way up, fanning out all your averages, right? You're trading above the 20, the 50, the 200, and you come back and you start testing. Like at some point in time, you're going to come back and start testing. When you fail, that's a bonus. I don't know it's going to fail the 20. I just know that at some point it's going to come back and test it. But then when it does, you're like, okay, the divergence is still there. Maybe we're onto something. And it was, failing everything. The divergence doesn't change. Until it does. Like, this is a crazy example, though, of, again, the market telling us that it's okay to stay in the trade. As long as that price is trading below the T-line and the 5 EMA, and as long as that divergence is intact, you're okay to stay in the trade. Like, it really is remarkable what, if we listen intently, what the chart is telling us. Irrational or rational, or it doesn't matter. If we truly listen to what it's telling us, you could literally change your life just by having extra income. Again, we've talked about this before. If you have a part-time job, a few hours a week, you're hoping you're going to make, another 35, 40 if you're lucky, maybe less. And then you got to get a babysitter, and so on and so on and so on. And is that what you want to do? By the time you go to work and pay the babysitter, there's nothing left. Or you can learn how to read price on a chart, learn how to manage risk, and probably make exactly the same money being at home and not having a babysitter. I'm not trying to convince anyone to change how they live, but I'm just trying to point out, for the sake of the example, that if done right, like if you respect what the chart tells you and you practice and do all the things you're supposed to do, this will be one of the most meaningful things that you can do with your time and ultimately your life. It's the kind of thing that no one's going to take away from any of you, and you are all more than capable of doing exactly what we show here. It is not as hard as the world wants to make it out to be. Sometimes, however, when we're sitting in an X space and we're listening to some people that are very intelligent, others not, it can be very convincing on what we should be doing or not doing, right? And it's difficult to separate the noise, which that is, from what we're being told is going on our chart. Right? The chart will tell us each and every time, on every time frame we look at, what is going on. Right? Is all we have to do is follow. Love walking my dog in the morning and listening to some spaces and listening to other perspectives. And there's a lot of bullish people out there. And the chart has been certainly supportive of that until it isn't. Right? So keep looking over your shoulder. Like, don't be one of those people that are married to your narrative, either long or short. Always be looking over your shoulder. This is a daily chart. You're trading above the 20, the 50, and the 200. You're trading near all-time highs. You're struggling to take this upper value range to make those new highs. The point of control, which is a draw for price, is a SPY, is beneath you. This is a volume gap, right? This is the tip of a shelf. Like, all of this stuff is here that you need to pay attention to, so that you don't get hit by something you didn't see coming. It's a bullish chart until it tells us it isn't, but it's also our job to make sure that we know what's going on around us, right? So when you're looking at your dailies, you're doing it for trend, right? You want to make sure that you're not pushing water uphill, or you're not trying to catch those falling knives. And you just back it up, right? Back up that time frame to start to get an early clue. 4 hour is kind of showing us that maybe there's something going on, right? We start to trade below the 20, the next candle opens up at the bottom of the previous, this gray area, like we talked before, is light trading. So there's less there to hold price up as it is, and you're kind of getting into a gap with the 50 beneath you. It's a pretty simple rationale for people to follow, right? Where people get chopped is too much lev on short time frames. That's where people get chopped up. Everything else is really simple. I'm not even saying don't use leverage, I'm just saying use a lot less. A lot less, especially now. But if you run tight stops and your entries are good, you should be okay and limit any damage that you get. But yet again, here's 1 hour falling into a gap. You can literally watch price move in it.
Blunt, can I ask? I've got a bunch of people that are watching it, this podcast. How often are you doing these podcasts?
I do them every Tuesdays and Thursdays at noon, or close to noon by the time I get in here.
Mm-hmm.
And they are available on FEG's YouTube site and my YouTube site as well. So if you wanted to go back in time, they're pretty much all there.
Okay.
Yeah, by date. So, my fear, Butters, is that all of this gets repetitive for people, right? Which I understand because I have a short attention span, and I understand how that can happen. But it's critical that we do this so that people can see over and over and over again that this works, and you can feel confident in using it, and just kind of getting the ebb and flow of how price behaves at critical levels.
Correct.
Like even on the SPY 1 hour. Here we go. Did we break through the 50 here, and here's our first major touch, and look what we get, right? Support.
But if you don't practice or back test, then you don't have anything. That's my theory, and I know you think the same way, and another buddy of ours, Ben, thinks the same way. It's what it's all about.
Yep. And I always, part of the reason I do this is because I remember when I first started learning, one of the things that kept me away from this was the fear that it was going to be too difficult, and it was something that my mind wasn't going to be able to absorb. Right? I wasn't a finance guy. I was terrible at math. I had convinced myself that it was probably not going to work out for me. That I wouldn't, even the vernacular was totally different, right? And the very first course I took, I felt terrible. Like everything was over my head. I was one of the youngest people in the room at the time, and the smartest person in the room was an 82-year-old woman that had been trading her money for 20 years after her husband passed, and she would tell you that she didn't even write the checks. Like she didn't even know how to use the bank account, never mind trade money. And she was the best trader in the room. Like I wanted to sit beside her, right? So, and I have tremendous respect for, and that's why I say to you guys, like anybody can do this. I mean that, right? You just have to allow yourself the time and the space to go through the process of learning. And I think what happens, and this is just my experience from teaching a little bit, is that everyone wants the fast track, right? Give me the magic indicator, give me this, give me that, so that I don't have to think, or better still, just give me the symbols, right? And that's not what I want to do. I want to teach people to be able to read price on a chart so that you can teach your own kids how to do it. Because you can supplement your income by doing this. You can.
It's amazing. You said one thing that I've been hearing for years and years and years. What's the magic indicator?
Yeah.
You keep hearing the same story over and over and over again. There is no magic indicator.
Yeah.
The chart is the indicator.
And you know what? Now that you say that, if I think back to, the first 10 years of doing this, I actually think I was searching for that. Right? Like, trying to find the magic bullet that would tell me everything I needed to know about the market. And I realized over time that the market was communicating with me since the beginning. I just didn't know what it was saying. and it wasn't an indicator per se that was going to be the answer to the questions that I had about where price was going. It was understanding that this is a language, price behaves in similar patterns on any time frame, everything's fractal. Our Fibonacci's allow us those nice retracement points, and they kind of give us that psychological edge of, I believe anyways, on what might be going on. The filters are things like the T line, my momentum bands that I don't often show, and the Fisher transform that kind of creates a Gaussian channel. Right? That's what I like about it, is that it gives me, like, I love these kind of overbought signals like this. It's not the kind of indicator that gives you a whole bunch of choppy momentum. It just like gives you this, and then it, in a perfect world, gives you a move like this down. Right? And this, as long as this channel's like this, it's filtering out noise, right? Fibs, fractals, and filters. Pretty simple stuff. And then it's just how price reacts in and around those areas. 4-hour SPY, just waiting to see if it falls into the gap. If it does, it'll find the 50. It'll be the first touch of it. So there's a high probability that it gets some support. It doesn't mean that it always does, but it's just a greater probability that it does. However, if it does find a 50, you got all this down here as a gap. So, and price being lazy, it falls into those things and moves up through them quickly.
Blunt, I've got some messages coming through to me. Thursday is a day off in the markets. Are you still holding a course on Thursday?
Ah, that's a good question. I probably will. And it'll be mostly crypto though, because that market will be open.
Okay.
So yeah, I'll probably do one on Thursday. Yeah, I'll announce it. I always announce them that morning, anyways, on Twitter and stuff. So you'll see. Like, if you follow me, you'll see it. But yeah, I think I'm gonna do one.
Yeah, I don't follow you.
Yeah.
That's a lie for anybody that's listening.
I know. So yeah, so I think Thursday will be fine. And the nice thing about crypto is it does trade constantly, and it's and for those that don't trade it, like, I know there's a lot of people that have traditionally just traded stocks or options or commodities and never traded crypto before, and they all say the same thing: wow, does it ever trade clean, like technically clean? And I believe that to be true as well. Like, I've always noticed that it trades very clean and very technical. And I don't know if it's because you don't have things like earnings and same store sales and all that stuff in the background. There's other things, but it could be that. But it does trade nicely from a technical point of view.
I got to run, guys. Nice meeting you guys. And Blunt, we'll talk for Thursday. And I'm going to bring about 4 or 5 people over.
Excellent. I'm going to have you in one day as a guest, Butters.
Yeah, I've got some good guys. Repo is another guy
Yeah.
Yeah. We'll bring some of these guys over, and great influence for everybody. So
absolutely.
Thanks, guys. Have a great one.
Thanks, Butters. Yeah, geez, if that's the case, you guys are fortunate, because Butters is going to bring in some people that really know markets as well, and it's great to hear other perspectives. And when those perspectives align, I think it's even more valuable. And I believe some of the people that he's talking about, we probably look at these things in a similar way. So I think it'll be good for you to hear a different voice. I also plan on having Mr. Nikoski back, although Thursday being the holiday, that might not be the day, although that's what I was thinking. But he's going to be back in as well, probably next week now if we don't do it Thursday. But yeah, that's what we got going on. Again, what you're seeing on your chart as far as this indicator is concerned, all of these things is actually one indicator. So your 9 MAs, your volume profile, and your signals is all one indicator.
That's amazing. That's great.
Yeah. So is there any other questions, guys?
Oh, man, we appreciate you, man. Everybody was listening. We appreciate you. it's definitely helped me refine stuff. I'm looking forward to listening to the other guests because a lot of things, I kind of had an idea of, but the more, like you said, we get these perspectives and they line up.
Yeah.
The volume profile being one of them for me has given me a tremendous edge and stuff like that. So I'm looking forward, and I'm glad that you created this platform where we can all come in here and feel comfortable to, expose ourselves on what we're having challenges with, and you've helped us
Yeah.
work our ways out of that, right, and refine it. So I'm just very
Right.
appreciative of everything you do, Blunt, and I appreciate you, man. You
Well,
have a, I'm sure you're finishing this up, but yeah, thank you, bro.
well, listen, I appreciate all you guys as well, and I guess I should give a shout out to King Koopa for bringing me out of FEG retirement and picking up these streams again. So I'm glad he reached out, and I enjoy doing them. You guys have always been great. I consider you friends, and we're gonna keep doing this. And I've always said you guys are gonna be the smartest group of people in the space by the time we're done. Like, this is real simple
Love
stuff,
that.
but yet very powerful, right? Like, this stuff works, and you guys are exactly the group of people that everybody says can't do this, right? And you're the guys who are the reason that I do this, because I know you can, because I could do it. I was scared shitless of this stuff when I first started it. I was a terrible math student. If anyone who knows me would know what I'm talking about on how much I hated numbers, right? And I had a math teacher. I was, taking trig and algebra and all that stuff, and he's like, dude, I don't think this is for you, right? But I teach a business math course in the afternoon. This was in high school, right? And he recognized something that I would wish I could thank him for. And he says, you know what, I think you're really gonna like this. We talk about how to calculate interest rates, we talk about bonds, we talk about stocks, and then we do a stock market competition. And I was completely fascinated from that day forward, right? But I was always told by the world that we can't do this. We're all told that. You gotta pay somebody. They know what to do. You're not a professional. This is serious stuff. Yeah, all true, right? If I pay anybody, it'll be a tax advisor. But I'm sure as hell not paying anyone to touch my money.
Same here.
Right? So, and that's, the older I get, the more staunchly I believe that kind of thing. But it just starts with a little bit of knowledge, right? Like, I know you guys are living proof that all of this is teachable, learnable, and executable in a super quick way. Like, I am going to do a boot camp, and I think like within 12 hours, 10 to 12 hours, you can have someone trained up from this system's perspective and being comfortable making trades, right? Yes, it's an evolution, but this is not hard to learn, even for a complete and total novice, right? It's just do what you're told. We have a few simple rules about, how price behaves, and aside from that, mitigate your risk. But aside from that, I think you're pretty safe. Right? Look at all this resistance up here. It was just a matter of time before it broke down. Knowing this big gap was down here. It's being at the right place at the right time. Right? So, one last little quick thing, if you're not doing it already, use the alerts on TradingView as a way to draw your attention to the chart, because sometimes you're like, damn, I missed that trade, right? How did I miss that? Just right click on your screen. It's super easy on TradingView, and then click add alert, and then all the parameters that you can set are right in here. So you can just say the condition is that you want to have, let's just see, the 5 EMA crossing, wait, 5 EMA crossing, here it is, 8 EMA. And you set it, right? And over here on the right hand side, there's a little clock. That's where your alerts will get shown. And then you can set it whether it sends you an email, shows up on your screen, and it will be good for the time frame that you were on when you set it. So I just set it on this 4 hour, just as an example, but you could set it on a 5 or a 15. And if you do that on the handful of things that you're constantly monitoring, you won't miss much, right? You won't miss much without even automating your trading. Like, you really won't miss much. And when you get one of those alerts, like let's say it was this one, you're probably already watching the chart a little bit because it's one of the handful of things that you do trade. You get this alert and you'd be like, yeah, I think I want to take that short. This is 1,000 EMA on this thing on a 4 hour. And look at it. It's just cutting right through the center of all of that. But yeah, so that's how you use the alerts, and I would, if you're not doing that, give it a shot, because it'll really help you keep your eye on the ball without losing as many opportunities. Because I even find sometimes I would lose opportunities, but since I've been setting alerts on here, I'm catching pretty much everything I need to catch. So, anything else, guys? If not, we're going to catch you on Thursday. I will do a stream on Thursday, and hopefully there's enough people around to join. So.
That'll be it, Blunt, man. You have a fantastic day, and I'll see you on Thursday.
You bet. Take care, guys. We'll see you soon. Thanks, everybody, for joining. Take care, guys.
Thank you, Blunt. Appreciate your time, man.
Anytime for you. See you, buddy.
You the man.